Thanks, everybody, for staying with us. You're here with the I Am Real Estate Show here with John Spurr, the owner of Inspired Life Mortgage. He is a local lender in Tucson. He's been around for 5 years. He's been in the business for over $10 million. So we're happy to have him here.
Yeah. So if I'm 10 million, that makes you 30 million?
Yeah.
Is that right?
Somewhere around there.
Oh, goodness. Okay, so we've been talking about the affordability of housing. Both, we've talked about renting and owning. And getting into a mortgage can be kind of scary for some people, especially because the rates are up. So do you have some strategies for someone who is trying to have a little bit more of an affordable payment for trying to reduce that payment?
Yeah. I mean, yes. Yeah. The strategy is down payment. In the current environment we're in, the quickest way to bring that payment down is to put more money down. I absolutely do not believe in buying a rate down right now. I think it is a waste of money. It is very expensive to buy the interest rate down right now.
Okay. That was going to be my next question. So, okay.
And if we were a year and a half ago, I'd say, yeah, let's buy the rate down. Right now, you'll spend $5,000, $6,000, $7,000 to go from 7 1/8 to 6 1/2, and it just doesn't move the needle. I'd rather you take your $8,000 and throw it at down payment than throw it at buying the rate down, because we could all be wrong, and in 6 months, an industry collapse, and all of a sudden rates come screaming down.
Like COVID, all of a sudden, has come back for the third or fourth time, and now everybody's back home again.
Yeah, who knows? We don't have a crystal ball. We believe we're going to be in this rate environment for a year to year and a half, but there could be a catastrophic event that happens. And the other part of it is, right now, any rate buy down that I have done a calculation on, you would have to make 24 to 30 payments before you break even. Well, if we're talking a year and a half before rates start coming down, you're throwing money away.
You're better off to refinance.
You're better off to refinance when they come down. So, and now, so the 2-1 buy downs have been coming back. Oh, the seller's willing to fund a 2-1 or 3-1 buy down. I don't like those either, because it's a temporary situation. So the other side of the coin, we're wrong, and we're in this environment for 3 years. Well, you did a 3-2-1 buy down. Well, at the end of the 3 years, your interest rate has gone up 3%, and rates are still high. So you accomplished nothing. Instead of taking the seller's $12,000 to buy it down, take $12,000 off the price of the house. That's just my opinion right now. Right. So if your question, how do we get the payment affordable? More down payment. So where does that come from? Comes from your own funds. Comes from your 401k or IRA. It can come from a gift from a family member, a family-like relationship. It can come from an employer. Any of the employers out that are listening, we can put together a home buying program for your employees where you can contribute to their closing costs and down payment.
Yes.
Or it could be a down payment assistance. The least of my favorite options.
You see how you hear that pause?
And he knows that's where we're going to.
No, we understand that. And with the down payment assistance, it's just that some people are looking for something to have, but they just don't have it. They want to get into something now because we keep telling them to get into something now, and they just don't have the down payment.
And there are good down payment assistance programs,
okay,
and there are bad programs.
Okay.
Unfortunately, what I see is everybody marketing the bad programs because it's got a large chunk of money down to people that have their own down payment, but this is how I can go buy a little bit more house by using this down payment assistance program.
Gotcha.
So basically, it's putting them in by the way, down payment assistance has a higher rate, but just the loan program itself is going to have a higher interest rate than a regular loan without down payment assistance. But there are good programs out there, and the ones that I like are actually grants. They may call them a DPA, but they're a grant, and the money is truly free. There's no obligation to pay it back. There's no such thing as like a silent second where they put a second mortgage on your property and you may have to pay it back. All of that garbage isn't, surrounding a grant program. But grant programs have income restrictions where you cannot make more than X per year or per month to qualify for the grant. And that's where the challenge comes in, because in Tucson, the 80% of the adjusted median income is $5,700 a month. And so it's not...
That's pretty tough, yeah.
it's tough to go qualify for the bigger house you want with $5,700 a month income and interest rates where they're at. So the other part is expectation, right? When I bought my first house, rates were ridiculously high, and it was my first house. I moved into it. I lived in it for a couple of years. We had some kids, appreciation, sold it, took that $20,000, used as a down payment on another house. I think we came out of a market where everybody was so used to just going and buying the big bad, I'm going to live in forever house, because rates were so low that, part of it's mindset in realizing that I'm a first-time home buyer. This is my first house. It's not my forever home.
The thought process needs to change a little bit from what it was when we had 2.5 interest rates.
So you talked about the down payment assistance programs having higher rates. Do those grants also have higher rates?
No, the grants do not.
So that's another big thing to keep in mind is, if you can get that grant that's free money and you don't have to pay higher rates. Some of those down payment assistance programs we do hear a lot about, but that's really good to know.
I think it's all about getting to an experienced lender.
Yeah.
Sit there that has a plethora of options for you to say, I can go and look at all these different things and give you 4 or 5 different down system program DPAs.
I talked to a couple on Saturday morning who called me, and they were we're using down payment. We want down payment assistance. We can get and they're just going on and on and on. They've looked at all the down payment assistance programs out there. And then I started comparing payments and going through the pros and cons. And the husband stops and goes, well, how much do I need down to buy this particular house and get the payment here? And came back and said, well, if you did 15% down, we would hit your payment goal and you could buy that house. Well, why don't we just do that instead of down payment assistance? Well, you're the one that called me and said you wanted to do that. So part of this is people just think that it's free money and it's a great way to go.
Right.
And once we start going through what the payments look like and what the interest rates are and the pros and cons, they realize, oh, I'm better off just using my own money.
So what is the ideal down payment to try to get whatever benefit most people are looking for? Is there kind of a magic number, or is it just dependent on the house and the situation?
It depends on the house, the situation, and their unique situation. A lot of the times I'm leaning towards FHA regardless of down payment, just because the rate is significantly better and it's an easier product to qualify for.
Right.
20% to avoid MI, but 5% would be a great place to start.
What's MI so people can understand what that is?
Mortgage insurance.
Okay. We're going to go to break right now. We're talking to John Spurr, who is the owner of Inspired Life Mortgage. I think we go back on the other side. I'm sorry, Danielle. We'll talk about a little bit about all of the other things that Inspired Life does for the community and the other organizations that are covered under the Inspired Life umbrella.